This time last year, there wasn't an open global prediction market platform that existed, right? And about 10 months ago, Augur launched, and it was really the first. So the first question is very simple, and maybe we can start with Joey. What's your assessment on kind of the progress of Augur since the V1 launch?
Yeah, it's still super early. It's still kind of in like the toy stage, as kind of Paul Graham would say with ideas. So, you have small amount of, very enthusiastic users, but there's this huge kind of chasm to cross in terms of making it actually usable, making it easy to get onboarded. It's still really hard to even, say you're a user who wants to place a bet on something and you're not familiar with Ethereum or Ether, you have to buy it. That's a pretty hard process. Ether is pretty volatile. And so it's basically like the main problems to solve now are like now that it technically works on a technical level, the problem now is how do you actually make it so that it's actually usable?
By the way, by show of hands, how many people here have used Augur? Wow, that's pretty high. I mean, that's about 50% maybe? Interesting. So the first time I tried to use Augur, the client didn't sync, right? And I think that's a common kind of issue. Are most people using Augur now using the client? Are they using some hosted version?
Yeah, everybody uses like the IPFS version or companies on top like Vail and Kysar. Those are kind of the only. You have like maybe 1% of users actually download the thing and run it on their own machine.
Got it. So Tom, anything to add on just the overall kind of progress of Augur?
Yeah, I mean, I think Joey summed it up pretty well. Essentially, we can kind of see now that on a technical level, this does in fact work. And at this point, it's a matter of simplifying and streamlining everything else and kind of the user experience and the onboarding process and starting to get more people, into this and actually aware of this and into the ecosystem.
I have a different opinion on that one, so I think what to comment. So I think it's not an UX issue. I think there are enough crypto enthusiasts who are excited about prediction market who would be willing to jump through those hurdles. I think the absolute main reason is liquidity, simply liquidity. So you go there and the markets are not liquid. And the reason for that is much more complex than just UX. It's market mechanisms, scaling, costs of providing liquidity. It's a complex topic, but I would say liquidity is the main issue, not UX.
Yeah, I agree with that. I mean, liquidity is the UX, I guess, for markets.
Yeah, well, but you said like onboarding experience, clunky, and so on. That people are willing to do that, but there needs to be liquidity. Then they're willing to jump through those hoops.
And Paul, maybe you could talk about, I think it's been 4 or 5 months since you launched Vail, kind of on top of Augur, particularly as it relates to liquidity. How are you thinking about that?
So we're sort of a generalizable prediction market. We've used Augur sort of to get started. All of our markets are represented using Augur. I think we have provided or focused on 3 primary features to try to sort of move forward the work that Augur's done. One is spent around curation. So I think when you have an entirely open platform where anyone can effectively create their own market, not everyone is a lawyer and is going to correctly define markets, and sometimes those end up being invalid or ambiguous, and that sort of hurts the user experience and makes it hard to sometimes get liquidity because people may be thinking they're betting on something when they're actually not. We've also focused on sort of off-chain trading, making it so there are fewer Ethereum transactions that users have to send to interact with the platform, and then also help with settlement. So in markets that are very well defined, and there's a clear sort of answer to what has actually happened, letting people get paid immediately rather than wait for sort of the decentralized oracle that secures the whole thing to run its course. So yeah, our focus has largely been on liquidity and curation, but it's still, as like we're all talking about, very, very early.
So I think one of the things that it's still quite unclear, right, and we're still in kind of the exploration phase, is what are the ideal types of markets that are kind of going to gain liquidity the quickest, right? And I have a working thesis that it's likely to be markets that simply haven't existed prior, right? So to me, one of the most exciting features of kind of this open global platform for prediction markets is that anyone could create a prediction market about anything. But I think Joey, you may disagree with that. But I'm curious, just generally, one, is that an exciting feature of prediction markets, and two, what are the types of prediction markets that you think are most exciting?
Yeah, I'd say I think that's a cool piece of kind of the long-term vision. I don't think it's where you kind of will see whatever actually does succeed in getting some liquidity. I don't think it will be those kind of long-tail things in the very beginning. My opinion is that at least kind of the target demo that I've seen that's actually worked thus far, which is kind of a sample size of one, so take it with a big grain of salt, is the U.S. election last November. There were two traders who each bet $500,000 on that election. And so the idea there is that if you want to go to a place where there's effectively no limit because you're trading with another counterparty, you could do that on something like Augur. And so that's a use case where there's kind of a fundamental need for it. And those people, people interviewed those people afterwards and asked them, why did you use Augur? And they're like, well, we actually tried this 3 or 4 other centralized betting sites and then ended up at Augur kind of as a process of elimination. They didn't go to Augur first. But I think to make people actually go to decentralized stuff first, the user experience and liquidity, as Martin said, has to get a lot better. I think the biggest problem is even provisioning liquidity, providing liquidity is very hard. Even if I have $10,000 that I want to use to market make on something like Augur or even on a 0x market, it's actually quite technically difficult to do that. And there's not a ton of open source tools that make it very easy. People are starting to build those, but again, everything is pretty early.
You guys want to chime in on kind of use cases at all? Or
I can jump in there. I hate to say it, but I think sort of both are right and wrong at the same time. I totally agree with Joey. And actually, my thinking here has sort of shifted since we've launched Vail, where I think there is something very sexy about an idea where people are creating their own markets, and there is this untapped potential of a long tail of markets that people want to trade on. And where sort of this market primitive becomes sort of, a sort of layer one part of the internet. And I think the medium and longer term version of this is going to include a lot of that. But again, it's really hard for people to quickly create good markets. And I think the cost of creating a market is still too high, so that it's not as much a easy avenue for creativity as it can be in the future. So right now, I think the best things are to focus on markets that people are already have an interest in trading, and demonstrate that a non-custodial sort of no-limit experience is better with low fees, is better than what they can get elsewhere, and then focus on the sort of long tail later.
We definitely believe very much in the long tail, and we do that by integrating into other protocols. So one example is DAO Stack. It's a DAO system, and it uses a system called holographic consensus, and it's basically a mixture out of voting and prediction markets. So how it works is it's a DAO. As soon as a proposal comes in, automatically a prediction market will be opened, whether or not that proposal will pass. And people can predict on it, or it's even looks more like staking, use an automated market maker. So it's really simple. For basically, it's just a thumbs up or thumbs down, and you have to decide how much money you want to stake behind that. But that plays an integral role in this governance process because it kind of filters, or it's a spam filter mechanism. So it shows good proposals that move to the top of the list if the prediction market indicates that they are likely. Another example are we have partnered to build future key TCR, so applying or creating a TCR, but using prediction markets or future keys to decide whether or not to add an entry. And of course, those are extreme long-tail markets. You have a prediction market on just, will this entry be listed, added to this list or not?
By the way, Martin, I want to get back to you on kind of the first question I asked, because you obviously have a different perspective, given that you're the founder of Gnosis, and I think got started around a similar time as Augur, right? And I know you guys have been kind of working on a lot of infrastructure, but haven't yet launched, a prediction market product. So I guess one, from your outsider perspective, like what's your take on Augur and how that launch has gone so far, and two, what's the latest on Gnosis?
Yeah. Well, first, congratulations on the launch, I guess. Although it's a little bit late. No, I think I guess it has been a success. Although I think the key issue are the market mechanisms. Augur right now has this on-chain order book, which, well, I guess Joey agrees, or you agree, has a lot of issues. Just for example, market making there is extremely expensive because like submitting an order costs you gas, and even if you then have to update the order or cancel the order, all that costs, and currently can easily be $1 for just like submitting the order and updating the order. So I kind of have a hard time to see market makers doing market making there like they would on other systems. So that's why we focus very much on market mechanisms, providing efficient market mechanisms. And we have taken, also another approach that we are launching in summer the first regulated prediction market. So that took us quite a while. Over a year, we have been in the process of getting a license. So technically, we would have been ready to launch a prediction market 1.5 years ago. But we were waiting for this license, and we finally got it, and we will launch in 2 months.
So I think one thing that everyone kind of has consensus on is that liquidity is, the most critical issue for prediction markets right now. I know, Joey, like you guys in the early days of Augur looked at some kind of alternative market mechanisms like automated market making and others. I think you feel pretty strongly that kind of traditional order book is the optimal approach. Maybe talk a little bit about your view there on what the optimal approach is.
Yeah, I mean, I think. That's the thing where like nobody's really figured it out, so I'm just speculating. But I'd say I like order books because traders understand them. But the big downside, as Martin would say, and I agree with him, is they're really expensive to do on chain. There's a ton of things that the way blockchains work makes the market microstructure of having an order book really weird and not really natural. And it's almost kind of a poor fit for how blockchains work today. And it's like one thing is that, when we started Augur back in late 2014, we thought that, transaction throughput will be maybe like 10 to 100 times higher than it is a few years from now. And so, by the time we ship this and get it all functional and working, you'll be able to have decent scale on these order books. In practice, of course, Ethereum still does 10 to 15 TPS a day. With Augur markets, with Augur markets, that's more like 4 or 5 TPS. And so it's a very low number. And so that kind of, I guess, prediction ended up being wrong. I do think we'll see some scalability solutions go live by the end of this year, though. You have things like Polkadot launching. things on the networking layer like blocks root. There's still a lot of research going on the plasma side of things. And so I guess I'd say, I think that's kind of one angle, is like the market mechanism itself, and Martin has a lot of great ideas on that. The other piece I'd say is just making it easy to market make. And so from that angle, it's more like writing open source tooling that allows market makers to easily deploy capital. One very basic example is like, say you wanted to market make on sports markets, you should basically be able to have like a bot that gets the lines off of Betfair and Pinnacle, ports them over to Augur or Gnosis, adds a small spread, and you can just, throw 10K into it and market make. Right now, of course, that's too expensive due to the mechanisms. So maybe Martin can talk about that.
But I think some people, would look at Uniswap, right, in the, the ERC20 token world, and would argue that the killer feature of Uniswap is just what you said, the ability to, make it easy for people to make markets, right? And I think that's a big part of why there's momentum there. So maybe Tom or Paul, you guys could share your views, if you have any, on what automated market making in the context of prediction markets might look like.
Yeah, we've looked into this a fair amount. I think so. There are key problems in like generalized automated market making for prediction markets, especially sort of binary prediction markets, because AMMs do really poorly when the underlying truth changes really fast, and traders are much better at quickly reacting to things and repricing things. So in the context of like a sports game or like in-game betting, like an AMM is going to get crushed. I think it's more interesting for like long-running scalar markets. So for people who don't know, scalar markets are basically markets where you're betting between some range. And I think there, when you're betting on like how many Twitter followers someone's going to have in 3 months, or like the price of like sort of in the synthetic asset space, an AMM may work. But I think the important thing is like decoupling, on a protocol level, decoupling sort of the oracle and trading, so that we have more opportunity to experiment with trading sort of at the application level. Because I think there's not going to be one solution that sort of works for all prediction markets, because like prediction markets are exciting because they are so broad. And we should have sort of like as broad applications. So
one thing I think worth getting into here is kind of this centralization versus decentralization, right? I think like, to me, something like Augur, the fact that it's decentralized means that people from around the world can use it for different types of markets, and a lot of the interesting features are from kind of the fact that it's decentralized, right? But that comes at the cost of user experience. And Augur right now is still very hard to use. And then you take a more centralized approach, and you can create a really good UX, but the trade-off is you lose some of the features of being decentralized. So maybe talk a little bit about that. I mean, one way it could go is the UX on the decentralized version kind of drastically improves, but it feels like we're still a ways away. So I'm curious your thoughts there. Maybe Tom, you can share.
Yeah, I think it's a sliding scale. Obviously, we are of the opinion Augur's kind of main value proposition is that it's a censorship-resistant global peer-to-peer prediction market protocol. That nobody controls this, nobody has authoritative control over it, and we can't go in, and we are the developers of Augur are as equal as anybody who uses it. And I think that's necessary from the base kind of protocol layer. Like, we needed to build this protocol out so that people like Vail and other companies can come in and start doing those for-profit kind of streamlining the process, changing some things along the way, and make it easier for users. So I mean, I think they both go very well together, and it depends on what your use case is for betting here. We know there's traders that will use the Augur client and run their own Ethereum node and Augur node if they're doing large volume because they don't want to trust somebody else. For somebody who's doing a $20 trade, $100 trade, $150 trade, maybe that doesn't matter as much to them. Maybe they're not as concerned on the security of the Oracle. And I think this is why people use Betfair. People use Predictit. They work very well for a lot of people. So I think there's absolutely room for both. They both serve a purpose. And I think it depends, who you're going after, what type of traders, what type of vertical for that, and how you plan to accomplish it.
Yeah, I agree with that. I'm an investor in Vail as well as I own Rep, and I kind of always saw, much like you had Bitcoin and then you had centralized services like Coinbase. I saw a role to play for centralized services that were providing trust and a strong UX on top of the protocol. So I agree with that. Martin, you, I think, have an interesting perspective because you launched a centralized, prediction market platform before you founded Gnosis. And so, what are your thoughts on the trade-offs between centralization and decentralization?
Yeah, we did a semi-successful, fairly successful centralized Bitcoin prediction market before, that's still live and doing decent volume, and that's fine as one application that can be successful. But with Gnosis, we are really want to do something very different. We want to create the basis for a global new financial system. That's a much different thing than having kind of one centralized or one service that does sports betting and a little bit betting on politics. So to build that infrastructure component, as we see Gnosis, where other protocols, or kind of all kind of protocols, as DAOs, lending protocols, all that stuff builds on top. It, in our view, needs to be 100% decentralized. And Gnosis, everything does on the protocol level will be there. We are on the extreme side of pushing the limits of decentralization, to the point that we are not suggesting one Oracle solution and are saying it can be open to any Oracle solution, and just trying to do this global liquidity pool and this trading mechanism really as a protocol. And of course, then you can have very specialized applications and centralized applications that tap into this global liquidity pool. And that's kind of the second piece. That's why we have this also start with this regulated entity. Unfortunately, it will not. It's still kind of a bridge to bridge those, or it's still a step to bridge those two worlds, and will take a while until this regulated entity can run on this global liquidity pool. But hopefully we'll get there.
I think this gets us to an interesting topic, which is really what is Augur, right? And I think Joey, you have a strong view here. Some people view Augur as a decentralized oracle, and that's the real kind of value prop. I think others would argue that it's both a decentralized oracle, and a marketplace. So maybe talk about your view there.
Yeah, I think it's both. If you had to describe Augur in one sentence, I would say, if you wanted not a simple description, but one that's actually encompasses everything, I would say it's a global platform for basically no limit trading. Anywhere in the world can bet on it, and the fees, long term should be quite low. So that's kind of the idea. So just as Bitcoin basically did that for payments from point A to point B, Augur's trying to be that protocol for basically synthetic assets that are bounded payoffs. So prediction markets essentially. And so what was the second part of your question?
Well, I guess unpacking that, why do you think? Rep, has this passionate community of people that like to report on outcomes, right? And it's proven to be, there's issues. There's been some, challenges, but it's proven to be pretty robust and work pretty well so far as a decentralized oracle, right?
Yep.
So I guess why do you think that it needs to be both?
Oh, I just think prediction markets are the most interesting use case for decentralized oracles. You have a few other ones like Maker definitely uses decentralized oracles. So do these other peer-to-peer lending decentralized apps. But I think prediction markets are just the most interesting one. And so when creating Augur, I almost view it as like a sort of yin and yang thing. It's like, sure, you can have a lot of one of them, but it's a lot more fascinating if you have both and they kind of counterbalance each other. And so if you look at Augur, it's kind of both. It's like this weird thing. Similar to like people talk about Bitcoin, they say like, is it X or is it Y? I think it's really both. And you can kind of decouple certain parts of it, like you can do like 0x style trading, but still use Augur underneath. You could even like buy complete sets and then trade them on a plasma chain or something. But I just think that like when we designed it, it's relatively modular. Like the pieces of the code base interact some, but not as much as you would think. I just think that prediction markets are that's the use case that I'm most excited about for blockchain tech in general, and then also decentralized oracle systems as well.
And I guess, Paul, as a developer that's building a user interface that's really focused on gaining users, right? I guess for you, like what's most interesting about Augur in particular now? And I mean, we've got a note that you guys recently forked Augur as well and made some changes to it. So maybe talk a little bit about that.
Yeah, I think the forking Augur narrative is a little bit overblown, so I can explain exactly what we did. But the reason that we have been built in Augur and continue to be built in Augur is the oracle. I think that's the most novel part of the system, and it's why rep has value. And so what we've done very recently, we wanted to support the 2020 election, and Augur V2 is coming out later this year. And so because of risk of sort of leaving markets on Augur V1 during the migration period, we haven't been able to, or no one's been able to sort of create long-running markets on Augur, which entirely makes sense. And so what we've done is taken some of the infrastructure to represent markets, basically just the escrow contracts, and launched those to support our 2020 markets. And we can resolve those either in a centralized way or later re-migrate those into Augur V2 when it comes out. So it's not a generalizable fork. It's purely something that our users had asked for these 2020 markets, and so we're just doing it for that, and are in full support of Augur V1. We still allow people to create markets on Augur V1 to trade on Augur V1, and then when Augur V2 comes out, people will want to create markets on that protocol, use the protocol for trading, use it as an oracle, and that's our job, is basically giving our users what they want, and so we will fully support all of that. And we would love to support some Gnosis markets.
Got it. All right, we've only got a couple minutes left. I guess the last question for you guys is, what are you most excited about, pushing the prediction market space forward in the next, 6 to 12 months? And maybe, Martin, we can start with you.
Well, yeah, two things. So one, of course, about the launch and finally of a consumer application, because a lot of stuff we build you can't see yet, but it's then of course nice to see something. And the second thing is actually this DAO I mentioned earlier. that will start in 2 weeks called DXDAO. And I'm excited about it because it will use prediction markets in a way under the hood, so it will not be obvious if if you participate in this DAO that you're participating in prediction markets, but you are.
Paul?
Yeah, I mean, on our end, I think just helping to grow these 2020 markets as large as we can. I think we're right on the cusp of a whole sort of the next sort of concentric circle of users starting to use decentralized prediction markets. And I think it's really exciting to sort of shepherd those people across the chasm and get them, onto these new platforms. And see, starting with things they understand, like 2020 markets, and then moving to things they hadn't imagined. But I think starting there.
Tom?
Yeah, I mean, I think as a blanket statement, Augur v2. For the past year, we've been very focused on figuring out what users' problems were, complaints were, issues with the software, how to make that better, both from a client perspective and a protocol perspective. So I think we took care of a decent amount of the protocol level changes and a lot of good new UI stuff coming. So it's just kind of taking everything that we have learned over the past year, packaging it up, polishing it up, cleaning it up, and shipping it back out there.
Joey?
Yeah, it's a multi-collateral DAI, wire as like fiat on-ramps for dApps. Those are going to be really important things. And then, I guess, if you look at Augur, the biggest problem Augur has, even before the liquidity issue, is right now there's lots of invalid markets on it. So when you go to Augur, you see these invalid markets, which are pretty confusing. So we actually have a release that's going to come out next week that basically has a bunch of fixes for that issue. Basically using some cool math involving like the spread on the markets. So I think that'll be cool.
Cool. Thanks, guys.